Our business editor, Stephen Carroll's here now for an update on the day's top business stories. Hi there, Stephen.
Hello, Catherine.
We're going to start with Argentina trying to cash in on Moscow's ban on food products being imported from Europe and other countries.
Yeah, that's right. The high-level delegation that includes Argentina's industry and agriculture ministers will be meeting officials in Moscow today. They're hoping to sign deals to sell their fruit, poultry, beef and dairy products to Russia. Now, it's a potentially huge opportunity for the Argentinian economy, which is facing its own difficulties after defaulting on its debts at the end of July. The head of Argentina's dairy industry body says it could represent a 20% boost in exports. That opportunity, though, comes at the expense of producers here in Europe. On Monday, the European Union announced €125 million worth of aid for fruit and vegetable growers who've been hit by the Russian ban. Delano de Souza has the details.
Exceptional measures designed to cushion the impact of Russia's food import ban. The European Commission has pledged €125 million to fruit and vegetable growers. They say they're unfairly bearing the brunt of Europe's policies in Ukraine. The emergency steps are set to reduce the overall supply of perishable products.
The whole idea, if you've just got supply and demand, following the Russian restrictions, there's much more supply on the market. This is a measure aimed at reducing the level of supply so that the prices don't drop below or don't drop to crisis levels.
The aid is set to take immediate effect and will last until November. It's destined for growers of carrots, peppers, apples and pears, amongst other products. In 2013, the European Union exported €1.26 billion of fruit and $769 million worth of vegetables to Russia, taking the total to just over $2 billion. The new measures are an extension of a deal announced last week by the European Commission to pay peach and nectarine growers for 10% of their crop. Russia's food import ban is set to impact the economies of Lithuania and Poland the hardest. And while the embargo also covers the import of dairy, fish and meat products, those sectors haven't yet been helped. The European Commission says it will continue to monitor market developments and not hesitate to step in and aid other sectors heavily dependent on exports to Russia.
Now, those measures, of course, were in reaction to the EU and US sanctions on Russia, but they didn't stop the Russian oil company Rosneft from drilling its first well in the Norwegian Arctic with the help of Norway's Statoil. Now, Rosneft won a 20% stake in the Barents Sea oil field earlier this year. Norway joined the EU in imposing tough measures against Rosneft and its boss, but this venture holds up because the sanctions apply only to future deals.
OK, take us through what's happening on the markets then.
Well, after a positive lead from Wall Street overnight, things are looking up, mainly in Asia in trading today. The Nikkei in Japan is being helped by a rise in shares in the low-cost airline Skymark. They're up over 20% after news that Air Asia might be interested in buying the airline. In general, though, investors said to be encouraged by signs of possible calming progress in resolving the tensions in Ukraine. You can see the Kospi in Seoul up almost 1% there.
OK, well, take us through some of the day's other company news. We're going to start off with some bad news for one bank.
Yeah, Standard Chartered, that is. They're set to pay $300 million to New York's banking regulator to settle claims it fails to identify suspicious transactions. Reports in the Financial Times say the settlement could be announced as soon as this week. The inquiry is a follow-up to a previous fine paid by the bank in 2012 for violating sanctions with Iran and other countries. Standard Chartered is accused of not improving its procedures since then. PricewaterhouseCoopers has agreed to pay a fine of $25 million for altering a report on the bank's activities. The consulting firm is accused of watering down an anti-money laundering report for Bank of Tokyo Mitsubishi. The settlement will also see PwC banned from doing consulting work for New York regulated banks for 2 years. And America's top discount retailer Dollar General has offered almost $9 billion to buy its rival Family Dollar. It's an attempt to trump the rival bid from Dollar Tree, worth $8.5 billion. A merger with Dollar General would create an industry giant with annual sales of more than $28 billion.
Right then, now if you're one of those people that's a bit glued to your mobile phone with Candy Crush and all of those gaming crazes, get ready to get addicted to a new game, one of the biggest mobile gaming crazes of last year. The man behind that has got a new game out.
Yeah, that's right. You might remember me talking about Flappy Bird before. It was this mobile game which was incredibly simple but also quite difficult to play and was a massive hit. 50 million downloads from the App Store until it was pulled by its creator. Dong Yang pulled it from sale back in February, saying its popularity had ruined his life. Phones preloaded with the game, though, were selling for thousands of dollars online. This is his follow-up creation that you can see now. It's called Swingcopters. To play, you have to tap the screen to move a man wearing the propeller up, as you can see, past various obstacles. It promises to be just as difficult as Flappy Bird. We'll have to wait and see if it manages to attract gaming users as much.
I'll keep an eye out for people doing that on the Paris Metro over that game. Thanks very much. Stephen Carroll there, back in about an hour's time with more business for you. We're going to take a look through what's making headlines here in France now with Flo Villemino. Hello there. Let's start off. New pencil cases and book bags for the French government.
That's right. It's back to school. The first cabinet meeting is tomorrow. Now, this can be an exciting time, as you said, new school supplies, opportunities to make new friends. But according to the business paper, this is the business paper in Le Figaro. The government is actually dragging its feet because the context is pretty terrible. We saw those pretty terrible growth figures come out last week. Hollande is at an all-time low in opinion polls, and this is likely to get worse as people come home from vacation, open their mailboxes, and find their tax bills, which are they're a lot worse than last year for a lot of people. But don't worry, according to the government, things are going to get better. You can see here, Le Figaro is taking a look at one measure the government hopes to put in place, and that is to lower taxes for lower income houses.